Okay, we're ready. Very good. We will start the meeting. Welcome, everybody. My name is Eli Vasquez. I'm the CEO of Bank Fund Staff Federal Credit Union, and very happy to have you here and virtually at our 2023 annual meeting. We have a full agenda. I am going to just cover some housekeeping issues. I apologize for the hoarse voice getting over a granddaughter cold, and so I will do my best. Anne Marie, who is the president of the board of directors, will lead the master of ceremonies, and I'll pass it on to her in a moment. The meeting is being recorded, so for those that are here and in Zoom, please be aware of that. We also have closed captions turned on for the meeting, and so you can turn that on in Zoom in your personal settings. Later in the meeting, we will answer question and answer questions that were submitted to us online, and we will take questions from the floor. If we experience any technical difficulties with the virtual connection, we apologize, but the meeting is being recorded and we'll have it posted on our website, so you could see it at a later date. So with that, I will pass it to Anne Marie Goulde, again, our board president, to be the master of ceremonies. Anne Marie, all yours.
Thank you so much, Eli, and very good afternoon to all here in the room and online. And welcome to the 76th annual meeting of Bank Fund Staff Federal Credit Union. I want to, of course, welcome all members of the board of directors, management, and also staff members. Let me begin with a few formalities. So I have reviewed the list of attendees who have joined this annual meeting, and I can confirm that we have a quorum, which is at least 15 members. The minutes from the last year's annual meeting were provided along with a call for comments and questions. Having received no corrections, no comments, the minutes of the last meeting are approved. So let me just now summarize the agenda for today's meeting. For the agenda, you will first hear from me my report as the president of the board. Then our treasurer, Chris Stroh, will give us the treasurer's report. Stuart Cohen is the chair of the credit committee. He will be next one to report to you. Afterward, Riaz Ahmed, the chair of our supervisory committee, will provide a report from the supervisory committee. We will then move to unfinished and new business and have provide answers to a few questions that were submitted to us and to management before this meeting. And then lastly, the results of the 2023 election will be announced by the board secretary, Pam O'Connell, who is here with us. So with this, let me move on to the report of the board president. I am honored to speak about our 75th year of serving our membership. As we take this opportunity to reflect on the progress we have made over the past 7.5 decades, it is clear that a vast amount has changed. We have witnessed tremendous advancements in technology that have transformed how financial services are structured and delivered. Additionally, the economy has experienced numerous extremes in economic cycles that have reshaped the financial industry. Despite these many changes, one thing has remained constant: our unwavering commitment to serving our members' needs first, while maintaining the credit union's strong economic standing. From an initial membership of only 96 member owners and $3,000 in deposits, we are today proud to report that BFSFCU is the 50th largest credit union in the United States. So quite some growth. Over the past year, despite the unprecedented interest rate environment, BFSFCU was able to return 24.5 million in dividends to our members. We also introduced our innovative global rewards program, providing extensive benefits to members based on their overall relationship with the credit union. We remain focused on our members' financial and monetary needs by supporting the closing of 730 million in loans, increasing the use of debit and credit cards by 15.5% to over 1 billion, and completing over 327,562 transactions through Zelle, wire transfers, and foreign currency orders. We have produced 51 webinars with 3,253 attendees, focusing on a variety of topics, including building credit and purchasing a home, all these topics that are very important to our members. We have also distributed 12 newsletters to keep our members safe from fraud and scams, and provide updates on the latest products and services offered by the credit union. Looking to the coming year, we remain committed to adding new members and maximizing the participation of borrowers and savers in our products and services. Our ability to give back to all members and sustain our financial capacity to better serve and invest in improvements to meet our members' changing needs is dependent on this commitment. As technology continues to evolve, we carefully evaluate new opportunities to make it easier and faster for members to join BFSFCU, manage their money, borrow, and make informed decisions about their financial future. In 2023, we introduced live chat, making it more convenient for members to receive personal service from our experienced staff. We also redesigned our website and its contents to give members and new visitors a more intuitive and value-added experience. The year has just started, and we look forward to introducing new and improving platforms that support our members' financial needs. Our commitment to giving back to charitable organizations remains strong, as we donated to the Children's National Hospital Blood Drive, Habitat for Humanity, Build Day, the Cherry Blossom Run to benefit Children's Miracle Network hospitals, and the Margaret McNamara Education Grants in 2022. In 2023, we launched the BFSFCU Giving Back program, a new credit union initiative that makes it easier for our staff to dedicate time to support organizations that they value. On behalf of the BFSFCU team and our board of directors, I would like to thank you for your loyalty and trust over the past 75 years. We remain member-focused and committed to delivering maximum value while maintaining safety, soundness, and sustainability as we continue our journey together. With this, I would like to hand over to our treasurer, Christo, who will provide us with the treasurer's report. Thank you so much.
Thank you, Anne-Marie. And let me also add my thanks to all of you for attending today's meeting and for your continued support to the credit union, to our credit union. As board treasurer and chair of the finance committee, my role now is to provide an overview of the financial performance of the credit union over the past year. As these have already been covered, I think quite extensively in the annual report that's been recently circulated, I'll try to be brief and just focus on the highlights. The overarching picture is that our balance sheet is strong. and our income position has remained robust. These results have been achieved despite the twin challenges posed by the rapid tightening of U.S. monetary policy that began last March and the unusually large inversion of the U.S. Yield curve that emerged in the latter part of 2022. Against this background, we're still able to achieve a modest. Sorry, we got some echo here. Thank you. We're still able to achieve a modest 0.7% growth in deposits, thanks in part to continued membership growth, which meant we were able to keep our overall balance sheet at $6.5 billion at the end of the year, putting, as Anne-Marie has already said, at the 50th largest credit union in the country. On the asset side of the balance sheet, member demand for mortgages and other loans was robust in 2022, as members sought to lock in lower interest rates, and our loan portfolio expanded by 6.5%, faster than the previous year's growth of 1.4%. And since member loan demand outpaced deposit growth, we took the opportunity to draw down our holdings of securities, which are composed primarily of shorter-term U.S. Treasuries and mortgage-backed securities. However, these still remain a sizable portion of our balance sheet at $2.5 billion by the year end. Our loan quality continued to benefit from our members' commitment to timely servicing of their borrowings, and our net charge-off loans fell a second consecutive year to only 0.7 million for the year. And our allowance for loan losses stood at a prudent 0.47% in gross loan balances at the end of the year, slightly lower than the previous year. Interest rate developments did pose challenges to our income position, but these were well managed. And we were still able to achieve a 4% increase in net income to $48 million. On the income side, we experienced an increase in total interest and non-interest income of almost $16 million, mainly owing to the effects of higher market rates on our investments and loans. On the expense side, although operating expenses rose by $9.5 million, this still left them at only 1.3% of earning assets, an improvement from last year's ratio of 1.4%. These developments meant that we were able to return over $25 million in the form of regular dividends, a year-end supplemental dividend, higher premium deposit rates, and fee rebates under the new Global Rewards program. As a result, we've been able to maintain a very strong capital and liquidity position. Member equity increased to just over 12% of total assets by year end, well above the NCUA's well-capitalized threshold of 7%. And our liquidity position has also remained very comfortable. Looking ahead to 2023, the credit union will continue to focus on prudently growing the loan book, appropriately managing our investment portfolio, controlling expenses, and giving back to members by rewarding savings, offering low-cost products, and pricing loans competitively. So let me close by expressing my appreciation of the credit union's finance team, led by David D'Annunzio and Charles Bangert, for their hard work, expertise, and support for the work of the Finance Committee. And let me also thank our other members of Finance Committee, Vipul Bhagat, Diane Dodd-Martin, who's just sitting in front of me, Paolo Martelli, and especially Pam O'Connell, who I believe is retiring this year from the credit union's board for their diligence and hard work. And thanks. Let me start back to Anne-Marie.
Thank you very much, Chris. I would like to now invite Stuart Cohen, the head of government credit union.
Thank you, Anne-Marie. My name is Stuart Cohen, and I'm representing the Credit Committee here today. On behalf of the Credit Committee, it's a pleasure to report that the Credit Union's lending department had another successful year, originating over 1,680 real estate loans and over 6,300 consumer loans. Total gross loans outstanding as of December 31st, 2022 was $3.49 billion. On December 31st, 2022, our year-end portfolio was comprised of about 93.3% real estate loans, reflecting 169.6 million in growth from the prior year. 5.8% consumer loans, reflecting a 29.3 million increase from 2021, and about just under 1% loan participations. Outstanding member and real estate and consumer loan businesses as of year end was 3.26 billion and 201.6 million respectively. Outstanding loan participation balances purchased by the credit union were 32.3 million. An important measure, the credit union's gross loan to deposit ratio was 60% at the end of 2022, compared to 56.8 at the prior year end. As our members continue to find the credit union safe and sound for deposits, we continue to explore options to grow membership and loans and to add value to the members. Chris mentioned the charge-offs. Another aspect is the delinquent loans, which remain very low. Loans past due more than 30 days were 18.6 million as of year end, reflecting 0.53% of total gross loans outstanding, which was actually down from the prior year of 0.58%. Reportable delinquent loans defined by our regulator, the NCUA, as those delinquent more than 60 days or more past due were 7.7 million, or 0.022% of total gross loans outstanding as of year end, compared to 7.1 million, the same percentage, 0.22% of total gross loans at December 31st, 2021. At this time, I'd like to thank the staff, the lending department that's worked very close with us, and to commend the volunteer members of the committee, Nancy Fleming, Tatiana Goodmark, Natalia Juras, Sanjay Puri, and Ramesh Ramaya. And we continue to thank all the members for their support and look forward to continuing working with you. At this point, I'll turn it back to Anne Marie. Thank you.
Thank you very much, Stuart. And we will now hear from Riaz Ahmed, who heads the supervisory committee. Riaz, I think, is online.
Good afternoon, Anne Marie and members. Under the Federal Credit Union Act, the Supervisory Committee is responsible for confirming that management's financial reporting objectives have been met and that management practices and procedures are sufficient to safeguard members' assets. In carrying out this responsibility, the Supervisory Committee oversees the activities of the Bank Fund Staff Federal Credit Union's Internal Audit Department, evaluates the adequacy and effectiveness of internal controls established by management, and obtains an annual audit of the Bank Fund Staff Federal Credit Union's financial statements performed by an independent certified public accounting firm. The committee engaged the auditing firm of Moss Adams to conduct an audit and express an opinion on the Bank Fund Staff Federal Credit Union's financial statements for the period January 1st, 2022 through December 31st, 2022. I'm pleased to report that Moss Adams has completed their audit, which was performed in accordance with generally accepted auditing standards. Their unmodified opinion, along with Bank Fund Staff Federal Credit Union's audited financial statements, is available on the credit union's website located at bfsfcu.org. We confirm that the auditor's report is based on information obtained from the Bank Fund Staff Federal Credit Union's records and through direct observation by the auditors acting on behalf of the Supervisory Committee, and that to the best of our knowledge and belief, the statements covered by the opinion are presented fairly. Lastly, I want to take this opportunity to thank Tia Vavra and the entire internal audit team for their support on the audit, as well as Dave Annunzio and Luis Arias for their support. Thank you. Back to you, Anne Marie.
So with that, I would like Eli to move to the questions that we have received in advance. So Eli.
And Marie, you're gonna have to repeat that for the people online. 'Cause
Okay,
it was
so
muted.
I'm told that there
Yeah,
was
go
a
ahead.
technical problem. So let me thank you again, the committee chairs, for their reports. There is no unfinished business. We have received a few questions in advance of this meeting, and Eli will turn to those questions. Thank you.
Thank you very much, Anne Marie, and thank you to all of the committee chairs for their reports. We actually only received one question from online, so I will respond to that, and then we will open it up to the floor for questions. The question that was pre-submitted was, considering the rapid rise in interest rates, what are the current unrecognized losses in the credit union's bond portfolio? The credit union's accumulated gains and losses within the investment portfolio are fully recognized and reflected in our audited financial statements. So those, as Riaz mentioned, are posted online and available. As of year-end 2022, our unrealized losses on the $2.5 billion investment portfolio were approximately $229 million. This amount is classified as an offset to equity and is characterized as other comprehensive income on the balance sheet. As of March 31st, the value of this unrealized loss has already declined to less than $200 million, and it continued to decline in April. Our investments, it's important to note, are laddered very carefully across maturities and primarily composed of U.S. Treasuries or government-backed collateralized agency in bonds. They are available for sale, and therefore it's very transparent. What you see on the balance sheet is what the value of the investment's unrealized losses are. And most importantly, is there a very short duration. The duration of our investment portfolio is about 2.5. So we have ongoing maturities where that investment portfolio matures on a regular basis. You can see how our interest income on investments increased year over year on the income statement. And as they continue to mature and they're reinvested, we expect that the unrealized loss will decline further. But very importantly is that we are able to reinvest it at higher yielding rates. So that was the question that we received, and I hope that I've answered that, but I'll open it up now to the floor to see what other questions there are, in addition to what we have posted on the website. So I look to the members on the floor. Yes, ma'am.
I wondered, when you talk about cost savings measures, would that result in any case in cutting staff in certain areas, especially accounts? I was told that some of the changes in special accounts had to do with the realignment from frontline. Some people who would have been frontline were now backline, but I was shaken by one of the things that happened. So I just feel like I think there needs to be special people who are specially trained with special accounts. The second question is probably not the place to ask, but I was also advised to wait as far as possible until April, like right now, to reinvest, add another Roth IRA because it might is that you?
Okay, thank you. I'll repeat the question for those online. The first part of the question had to do with savings and whether that involved any layoffs, and our member had referenced that she had heard about realignments and people in special accounts not being there anymore, and then realign.
We're no longer.
Yeah. Okay, and I'll address that, and then the second question had to do with it. I guess she was advised to wait until April to invest in an IRA. So I'll take the last question first. In terms of investments, that's something that every member needs to evaluate very carefully on a personal situation. We do have representatives in the back that I encourage you to talk to them and maybe try to get clarity on what was said. Perhaps is that there is a deadline that up until tax day one can open an IRA, and maybe that's what was being said.
Right, but they just advised us, wait.
Yeah. But the other piece of it is maybe, and then again, this is a personal decision. I mean, one of the advices that we give is do not time the market. Now, timing the market this year probably helped. I was speaking with one of the members that walked into the room, and ironically, our minutes say, you know, zero interest rate policy, and look where interest rates are now. And so that is a personal decision someone needs to make. And so to wait, yes, probably benefited. But what we advise is not to time the market. There's a lot of stress in the markets out there in terms of pricing deposits right now. A lot of organizations, unlike ours, are liquidity constrained. And so they had business models where they borrowed in order to be able to lend funds. And with the Federal Reserve and central banks throughout the world, you know, raising rates to restrict liquidity, some of those organizations are having a difficult time. And so you see a lot of higher rates in short-term products, but not as high rates in longer-term products. What we have done is we raised rates throughout our product structure at the end of last year as we saw the rapid rise in rates. But we particularly raised rates on share certificates. And we gave a presentation at one of the retiree associations where we encourage laddering of share certificates, where you don't commit to, just short term, because you can quickly get an inverted yield curve, and then rates will be lower if the economy goes into recession and things like that. And so that's what we advise. So if you waited, it probably benefited you, but it's a good thing now to then assess. And we have some really good share certificate rates out there, and we're seeing a rapid uptake from our members on share certificate rates. Your second question about realignment is, in the special accounts group, we did do a reassignment, is I guess what I would call it, because we had individuals that maybe are some of the ones that you've worked with that were in the branches, but we had to move them to our offices here to take care of other duties. We haven't had no layoffs, fortunately. We are very fortunate that loan demand is strong, that we are able to lend. There's other institutions that are cutting back on lending because of the liquidity crunch. And so we've been in hiring mode. During that process, sometimes we will move individuals around, but we have a CRMD team that's called Community Relations Member Development Group there's two of them in the back of the room, and the leader, Sharonda, of the group, who are some of our very, very experienced people. And so I encourage members to make appointments with them online. One of the things that we did for efficiency for members' time and for us is we have online video appointments, so you can make appointments with those individuals. The folks that were realigned are still there, and they're actually very valuable. One of them, who I don't like mentioning names in the annual meeting, is kind of our crunch person on testing new systems. He's so knowledgeable that we have him test new systems. And so yeah, we're very fortunate that business is strong, and our members continue to invest and buy properties and buy autos. We've seen a big surge in auto lending as well, which is a very good thing for portfolio diversification. Thank you. Any other questions from the floor? No? Well, with that, I will hand it back to Anne Marie, and thank you for your questions.
Thank you, Eli, for the answers. And I would now ask Pam O'Connell, our secretary, to open the envelope with the results of the election and to announce the election results. Pam, please.
Thank you, Anne Marie, and welcome to all our members and staff. I have the fun part of this engagement. Sometimes I think of it as and the winner is. But no, I'm very honored to share with you the election results. As many of you will know, we have a third-party firm that manages the voting process. The name of that firm is Q's eVote. And they have reported that we received 5,329 votes in our election process this year. So they were also sealed and have not been opened by that third party. And I think we're now ready to look at the top three. There were 3 positions available this year for election. All right, so the top 3 votes were for Amadou Sy with 2,225 votes, Sana Al-Hajj with 1,768 votes, and Anne Rennie with 1,608 votes. So these results will also be posted in full on the website, and I would like to welcome the new members and congratulate Sana for her reappointment. Thank you.
With that, let me join Pam in congratulating new members and welcoming back returning members and thanking those members who have not been re-elected and those who have been standing for election for their service. It is an important contribution, you know, for our membership. So we all very much appreciate people being willing to do that and to put themselves out there. With that, let me all in the room, participants, thank you for coming and for your interest in these annual meetings, and thank those online similarly for that. And we adjourn this meeting for this year, and we will, you know, you will be in touch, staying in touch, hopefully with your credit union, and we will be hopefully seeing you next year for the annual meetings. Thank you so much.
Thank you. I'll just officially close. Thank you, Anne Marie. I know we have people online. If there were any questions, please send them to our marketing department that we didn't address. We always value member feedback, and many of your questions are useful for us to put articles of interest on the website and continue to keep you informed. So thank you again, and congratulations to the new board members. And thank you, Pam, for all your service over many years. Thank you.